Okay. Hi there, traders. Let me know who's in and who can hear me. If I'm coming through loud and clear. Not a bad day today. Well, for what we've got anyway. It's not so much on the ASX. Pretty quiet. Just making sure my stream is okay. Everyone's on the computer today. We're in obviously in lockdown in Melbourne, and we've got hey Sharon, and we've got kids home today. So I'm in charge of teaching. My wife's actually a primary school teacher, so she's doing her own work at the moment with her own kids. So just running in and out. But they've pretty much got it down pat, these kids now. My little daughter ripped into her work that we put in the book last night, ripped into it really quickly so she could have a bit of a bludge today, but she's trying to get out of working too much. No, they're doing pretty well, so it's just keep them quiet now, feed them up, keep them quiet for the hour. They'll be sitting there playing on the computer, and then we'll be back into it a bit later on. So been a busy sort of a day, not much trading for me intraday. So anyone that's on the we chat to in the Discord channel. And if anyone's not in there that's interested, just send us an email and we'll get you onto the Discord channel. We talk a lot of intraday stuff, g'day Pete, and a lot of other stuff on shares. But the share stuff is based around trade setup alerts, which don't happen obviously every day. But intraday stuff is quite interesting. It's good fun. But I've been quite quiet obviously today. I don't know if the boys have been, the people in there have been getting into it, but I think it wasn't actually a bad open. It's just the markets of trade headed straight south. SPY was choppy this morning, which is I don't like the SPY. I don't trade it much. I trade maybe the Hang Seng and the Nikkei, mainly the Hang Seng. So I think it has some really good moves, and they telegraph a bit better. Whereas the SPY can head down to support and then bounce, and I'll be looking for a higher low and just straight back up again. So tougher one to trade that in that respect. But they all got the same sort of intricacies, so we'd love chatting about it in Discord. So if you do want some more info, send us an email to support at tradesetup.com.au. Hope everyone else is doing well. Had a great weekend. And if you're in lockdown, I hope you're doing okay. I know there's been a few issues, and there is a lot of concern around people. So just make sure you're taking things slowly. You take care of yourself, I guess. Anyone that's new to Trade Setup, welcome to the live stream. It's the 31st, the last day of March. May. And just remember, the US is closed tonight, so we may peter off. If you're trading the European session, you might find that it's got a sort of volatile, not volatile, but the normal sort of an open. Then it'll fade later on because there's nothing to go by. The US is closed for a public holiday tonight, so there'll be no lead into the US from the US at least. So we may fade, quiet down towards the end of our session as well because we sort of everyone's placed themselves where they want to position themselves where they wanted to this morning. For trading, whatever they're trading, maybe gold or whatever. But I wouldn't expect a hell of a lot of action later on. We might have a bit of a quieter opening tomorrow as well. So just bear that in mind if you're intraday trading. Let me minimize that and we'll get into it. Oh, get rid of that, my little pick. Now, what I was going to talk about today, I was going through, and I've had some charts up obviously quite a bit on mainly the currencies because at the moment, things are dollar based, US dollar based. It's about US dollar. What's the US dollar telling us? They're talking about inflation. Starting to build in the fact that you can see this is the US dollar index on the screen now. And just make sure that you can all see it okay. I think I'm in the right spot. Yep, no, that's all good. So this is US dollar index. So like I always try to say, I mean, picking stocks is okay when things are, easy, which is not easy, but pretty much the ASX is going up. So what I'd always do, and I was speaking to someone about this later on mainly about technicals. So anyone that doesn't know, my main focus is purely on technicals. Supply demand on the technicals, any sort of psychology built into the technicals, where people are going to get trapped, and that comes from an index background and FX and stuff. G'day, Nathan. So I like to look at levels where it's important. I think all markets trade around key levels. If it's hanging around in no man's land, it's hard to pick which way it's going. It doesn't. It applies to stocks. It applies to indices, currencies, Bitcoin and stuff like that. So it's the main areas you're trying to identify is where you're going to get some supply or demand from traders. and why. Is it fear-based selling? Is it not fear-based selling? Is it just standard pullback? Are we going into expansion? All these sorts of things. So the bulk of my stuff is based around um, technicals. I mean, when we're talking and sending out share alerts, obviously I will like to read bits and pieces, but I don't delve into the fundamentals of it as much. But what I do like to do is really keep an eye on the macro picture. And I think that's important for everyone. Not, it doesn't really matter too much what you're trading. You should have a bit of a macro picture of what you could be happening. Where are you going to get caught? What's going to trigger a sell-off? And there's been quite a few times when people are saying this, and this is going to trigger it. But I mean, everyone's got an opinion on something, but what are the general themes in the market? What's the US been doing? How has the US dollar been reacting to different things, different scenarios? You can talk up bonds, if they keep going down, the US dollar is going to do this, but if it doesn't, what's the picture? So you're building the picture with a few different markets. I like to look at obviously the US dollar. We've got bonds in the picture, gold. We're looking at your commodities like oil and copper, because it's all based around your supply and demand as well, and the global market opening up. So obviously, we all know the biggest thing is inflation at the moment. So what does that mean? What is the US dollar saying? And in turn, what are bonds saying about inflation? And I was reading something interesting this morning about bonds. I think a lot of it's been factored in. They had some numbers out on Friday night in the US, which were kind of inflationary, but more than they expected. But they were expecting inflationary figures, if that makes sense. So a lot of it's been factored in um, to bond prices already. Okay, so you've got to remember, markets don't react; they guess. Generally they'll factor in what's happening, and if in for example, if those in figures were expecting to come out a lot stronger, we all knew that. We don't know how much stronger, or if it's a little bit less, that makes sense. So you've got your previous figure, the expectations, and then you're worried about what. So the market will factor in those expectations, not so much, and they'll react if it comes way out of whack, especially with payrolls on a Friday night. We used to trade around payrolls. You're not looking at what the expectations are. You're looking at what happens with regards to those expectations, because everyone's built a position based around that. They've either taken some risk off the table, or they're added risk depending on what those expectations are. Okay, so it's factoring it into price. Now, when it comes out of whack quite a bit either way, the market has to adjust. So it was interesting. You saw the US dollar on Friday night with those inflationary figures. You can see it spiked. So that was a number, spiked straight up and straight back down again. So to me, it's a big flush. So the first thing I saw that, and I thought, okay, hang on a sec, we've come off a key support zone, and we're sitting to be flushing through, resetting, bouncing back up. And we've done this a few times, press down, retest, bounce back up. But we've been holding a trend down, which is quite clear. Right from, what was that, March, mid-March, end of March, a good trend down. But what we've done is just broken that trend. This is off some sort of fairly major support. We've touched back in here. Was it early Feb, mid Feb, sorry. Reacted up and off. We've come straight back in that zone. Even flushed it with the most recent action below that level. It's around, say, 89.65 thereabouts. Flushed it and bounced. Then we consolidated into the Friday number. Pretty much went sideways. So really, it was an each way bet whether you're going to break up or down from there. And it was going to be over the number. So the market wants to do something, and you can see it sort of compressing. Come into that Friday, I was looking at that thinking, oh, this thing could easily pop, but I don't know where to from there. I don't know what's going to happen. How would you factor that into your trading? How would you factor it into your macro view? The fact that it sort of bounced, it was pressure pushed up, the market will do that a lot. It would just like to flush a certain way, just to trigger traders around the market, and anything linked to the US dollar, like you've got your euro. Euro's pretty much going lockstep with the US dollar at the moment. Or whether the US dollar is going lockstep with the euro, but the US dollar is the main focus regards to US inflation, what's happened in the US dollar, massive inflation in the US, then they've got to raise rates. Raise rates will start to cap it. Any sort of, what is it called, debt? Because at the moment, like even the US government said that let's go out in a couple of $1 trillion spending spree because debt is so cheap. Let's worry about who's paying it off later on. And the Biden government knows now that it's probably not going to be their problem. If it goes through those $1 trillion packages, by the time it starts to filter into the market, into the economy, years have gone past. So, but what it's going to do now is trigger massive inflation. So the market's sort of looking at that, and that's why you got this I'm not sure when that news come out, but after that inflationary figure, and then you got this spike. The thing is, I reckon the reason why it's come straight back down again is because everyone on the FOMC was talking during the week, talking up, okay, we've got inflation. We're going to start looking at opening talks with regards to tapering, but for now, we are not tapering. And they've said that they've been adamant in that picture for a long time. So even though the market is expecting inflation, um, they're also trying to digest whether or not it's going to be permanent inflation, like we can get these higher figures for longer, which is going to push the Fed into a corner where they have to react because you can't. They expect that they've got a 2 to 3% inflationary target. If they're above that 3% zone, they're happy for a little while because they're saying it's going to be transitory. If it's not, and the market and it starts to show that it's not transitory, it's kind of permanent, and there's a lot more demand in the market. There's a lot, people are spending more. It's not just a spike or a transitory figure. Then the bonds will start to react, and I think that's what the US dollar is probably trying to trigger. Just knowing that that's an inflation figure, let's trigger a bit of a short squeeze and come back. But at the moment, the US dollar to me is not saying too much different to what it was on Thursday, Friday. It's still bouncing around this zone. We might just be range bound at the moment. So range bound to me is meaning that over the longer term, the US dollar has to deal with inflation. They're going to deal with inflation. And inflationary figures I would expect is going to, I mean, it's a different macro picture too, I feel. At the moment, it's not traditional. They're looking at raising rates, buying US dollar goes up with rates because it's a what do you call that? I always forget the words. Um, Currency, anyway, I can't remember. It's a pairs trade, as in you're buying the US dollar because the raising yield you're going to get it. So you want your funds in US dollars as opposed to, say, Aussie that's doing nothing, or Euro that is not doing too much at the moment. So the US is expected rates to go up faster there than they will in comparison to the Euro, the Aussie, maybe the pound. They're all potentially looking like they could go up because they're going to have to deal with inflation. But who's going to go up the fastest is to where are you going to park your funds. Now, on the flip side of that, when massive flow of funds go into the US, they want to put their money, if it's going to go into US dollars, they want to put their money somewhere. Where are you going to put it in the stock market? If it's inflationary, I would expect, and I was just thinking about this over the weekend, you would expect obviously higher yields are going to crimp gains because everyone's sort of saying the stock market in the US is overvalued. On the flip side of that, if you've got massive amounts of stimulus going into the economy, um, there's going to be a lot of stocks that are going to benefit potentially over the coming years when those funds start to flow in and start to be utilized, and obviously going to trigger inflation. But whether or not that we see a bit of a slamming in the stock market, which a lot of people are expecting because the news has been talking it up. Inflation is going to be the next big concern. They're going to get smashed after that. Well, the stock market's going to get smashed because it's overvalued. Debt companies like your tech, every time we talk up inflation, they get knocked down a bit. They didn't do too bad on Friday night. So the actual stock market fared that inflationary data quite well, even though it's coming out a little bit higher than what they expected. So the market is still trying to decide whether it's transitory or not, I feel, at the moment, because the bonds really didn't move. They actually ticked up, so yields were going down. So if it was really inflationary, when everyone's concerned about this massive inflation problem, with the US throwing money at their economy as well, just loading up, there's still, market's still looking to see if it will be transitory. Because if it is, and the Fed, we get these figures that they're saying that, okay, inflation starts to ease back to the 2 to 3% zone soon. We've got that initial spike because everyone's come back, they're all spending the money. Once that's spent, it's gone. The sort of savings may be, there might be a bit more savings to come in, but generally speaking, that inflation is going to be contained. What does that mean? We're still going to hold off on easing on stimulus because our employment data is still not where we want it to be. So if that's the case, the market will start to probably, I would feel, start to edge higher because it's more of the same, still going in the same direction. Like you get stocks keep ticking higher because generally stocks have to go higher. They're built that way. Indices will generally tick higher until there's a definite change in the outlook. But what I was seeing is what are currencies yeah, long story short, what a currency saying to me, this US dollar, I think this break was kind of important because you couple that with, say, what the euro is doing. This was the trend up that euro's been following for quite a while, and we just found a bit of resistance up here. We could have chopped around here and held off this support zone at 121, and we did spike through on the US dollar move. Now you might say that's a flush, but what that does for me is I'm looking at that thinking that is flushed that level. Okay, we flushed this support zone 121.70. Whether we're going to keep ticking up from here, I don't know. I'm more inclined to think that we're going to go sideways because you factor in the US dollar as well. The US dollar can be range bound, and you'd expect, or you would expect the euro to be range bound as well. But I think potentially this uptrend is over in a way. So that's the euro and the US dollar sort of putting more emphasis on inflation, and or maybe they're going into a holding pattern. Either way, there's definitely inflation on the cards. It's just what's going to when rate rise is going to be triggered. Now the Fed have obviously been talking up. We're not going to trigger. We're not going to do anything yet. But sooner or later, they have to be pushed into doing something. They have to do something. You can't have inflation getting out of hand. You can't grow an economy without having to cool it. It's going to if it starts growing, you throw money at an economy, it's going to get spent. There's areas going to grow. It just has to, especially with that amount of money going into it. So inflation has to be a concern soon. Inflation is going to pick up. They have to do something with rates soon, and which means they have to taper the bond buying. So basically, when they start talking up bond buying, tapering, I think that's when the market's going to start to go in a bit of a profit-taking mode potentially. But for now, they're not doing it. But just these moves that we saw, that's the euro. Look at the Aussie too. The Aussie's breaking down. That to me is that's more anticipating what could be happening with a risk on mode. The Aussie's sort of, I guess, telegraphing a bit that longer term, the Aussie's looking at inflation as well. Whether we've seen the highs that have been put in place or whether we go retest the highs is still a bit of a, it's a big question. If we go to the daily on the Aussie, to me, that's looking a little bit heavy. You have there's continuation up here, pullback, continuation. Then we've had a big pullback to test the anchor to the uptrend, which to me, this is the anchor to the uptrend here. The key sort of anchor on the daily. Then you've got another key anchor here. Retested it, and we're heavy at a lower level. When you're heavy at a lower level, to me that we're going to struggle to get back up through that level. And anyone that's been long for quite a long time might be enticed out of their position, having to sell into market. And anyone that's looking at it thinking about a sell might be enticed into it. They have been potentially proven wrong a few times, looking to sell here, squeezed out, sell here, squeezed out. Third time's a charm. But either way, I think the weighted numbers could be going from buying to selling. It's still, it's still early days yet. We've got this inside level, which is holding a bit. Just in here, somewhere around the 77 mark, we pushed through the 77. We've always looked at that as a bit of support. Pushed through 77, flushed it out, and then bounced back again. So you got the US dollar, which rallied, spiked up, reversed straight back down again. The euro did the same, and the Aussie's done the same. Spiked down and reversed straight back up. I think one thing, so we look at the US yen. Now, the US yen, if you're looking at US dollar weakness, we shouldn't really have broken to the top side. I wouldn't have expected on the US yen, because obviously, buying US, you're selling, well, you generally by default, you're selling the yen as well, and it's bullish for a US dollar appreciation is bullish for obviously US yen. So to me, if we're still looking at some serious US dollar weakness, you wouldn't have expected the yen to break higher, this currency pair to break higher. So this is looking more bullish to me. We're holding these inside levels, these higher lows, and it's starting to break up. We haven't come in contact, we haven't really tested up towards the highs around 110, 111, 111 more than likely. Go back to the hourly. And I'm just expecting that sort of a push higher. We've broken to the top side, but we haven't really retested. We haven't built a base to work from. A bit of a spike up, move down, pop up, a lower high. But this could be all part of a bit of a flush. So what I'll be looking at on the US yen is more, start to find and build a base. Maybe not exactly like that, but if it starts to build a higher low in comparison to this level, we're not talking just the minor levels like this. We're talking all this major picture. This is your major picture press up, peaked up here. This is a nice little base that's worked off, nice higher low, extended, another higher low, extended, failed. So all part of a bigger correction. So this is your first leg up, correct, and we're looking for that secondary leg up on the US, which would obviously fall in line with more strength potentially into the US dollar, which to me is going to be over time inflationary, longer term inflationary. So yeah, it's all these moves. I think with currencies, it may be starting to telegraph. I mean, maybe we just chop around here. We could be range bound on the yen too, the US yen, for a while if the US dollar holds between that support and resistance and becomes range bound for a little while yet. And I think it's all going to come down to looking at those figures that come out with regards to inflation and what the Fed is saying. They've been defending themselves for quite a while, and they're quite adamant. Like I said, you'll see them coming into the number on Friday. Everyone was talking. Anyone you could, even the Fed's mates, their next door neighbours starting to get on and talk up, holding on stimulus. We're not going to take off stimulus. They were trying to telegraph that completely. So the market has got that in the back of their mind. If this number comes out stronger than expected, which it did, the market was sort of capped going, yeah, we could go up because of inflation, but inflation doesn't mean too much until the Fed is going to do something, and they're not just yet. So it's still the same old picture. It's just starting to, I think, weigh towards the upside with regards to inflation. So I hope that all that's making sense. Now, just going over to things like, we'll go to the pound. The pound actually looks more bullish to me than anything else. It's just, you can see this move. Now, the central banker I can always forget, Bank of England, was talking that they may have to move on interest rates sooner rather than later, which is bullish for the pound. And even with the US dollar bouncing, the pound didn't really do too much, and then it just pressured back up again. So moving on interest rates, sort of bullish for that pound US, but it's got obviously mixed emotions. But if the US dollar heads down, you should expect head south on the US dollar. You should expect the pound to go higher with that as a backwind, as a tailwind as well, with talking up raising interest rates in the UK. So that's your currencies we're looking at. I think you take a look at copper. So copper's quite bullish to me. We've got, sorry about all the lines on my charts, but you've got this rally up here, which really didn't break until we got this kind of a grind through. And then we've got, your first move down, secondary move down. I could probably take that from there to there, couldn't I? That's kind of your first move. If you measure that out, yeah, look, that's coming perfectly. So your first move from that high to that low, measure that out, and it's roughly the same as that secondary leg down, flushed out a bit lower, coming into support zone, lifted. We were talking about this as a higher low for a while. Most mornings on the morning report, and it actually held up quite nicely. And we've got some other high lows, so it's breaking up at the moment. So we've got longer term move up, contraction, and we're looking to back into expansion. So when copper is looking to go in expansion, they're looking for increasing demand, okay, which is economies coming out, more inflationary. So they're sort of looking to inflationary figures as well, which if the US dollar does start to rally, I mean, the problem is there could be if the markets capitulate on shares, like many kind of expect, the US dollar will find a safe haven bid as well. But it could just really start to rally hard because you've got a safe haven bid into US dollar, plus they're going to probably capitulate in the back of inflationary concern, which is, I would expect, is bullish for the US dollar as well, which would potentially, cap copper a bit as well. So there's these sorts of figures, but I think at the moment, this is short-term bullish. I would expect copper to be back up towards these highs, potentially testing these highs and potentially pushing a touch higher. Looking at oil, had this, let's just go back here, sort of controlled move up, flush down. That, coming off those highs was looking quite negative at the moment. Then it bounced straight back up again. And we held and consolidated just below that same level, that resistance zone, consolidated, which is a really good sign. And once we started to retest, we flush it out, then retest it again. That's a sign that, we're going higher. And we did pressure through, but I think we pressured through, held that, retested, bounced through the highs on Friday night, and then got sold off a bit. I mean, either way, it's still in an uptrend. We might just have to have a deeper correction because we couldn't go this time, once we failed to get through these, and these are the highs I'm talking about. Failed here, sold off. We're taking a deeper run at it potentially for me. So I think oil might start to kick higher. Again, supply demand saying to me that demand's going to pick up. And crude is the best market. If they don't think that demand is going to pick up, they'll just cut back some supply to get the prices higher. Anyway, nicely manipulated market, old crude. So that's it for me. And I hope we got gold. I still think, I mean, look at gold just starting to run again today. It's opened up. Nice, good trend up in that's Aussie gold. Well, gold in terms of Aussie has been quite nice. So that's bullish for our local miners and things, which are doing well today. Gold itself, spot gold, is pressuring higher. I love this little flush down. We've got this is a rising uptrend, coming line to about here. Perfect, pullback and rejection of that level, and then we move straight back up. I think we'll probably get through that 1910 zone. We may chop around here and let the rising uptrend catch up as we chop around, but then go again. But for now, that's sort of suggesting to me too that the US dollar is not going to do too much on the upside for now. It's going to be more range bound. So what I'm thinking, long story short, is that inflation to me, we know it's coming. Okay, it's just when. It's a question of when. And until the Fed change their tune, I don't think we're going to change our direction. It's going to be choppy still, and potentially get choppier as we get closer to that point where the Fed's going to be having to react to stimulus. They're going to have to take off, ease off on or taper their bond buying program or taper stimulus, which would leave bonds potentially, once they pull off that support for bond prices, yields should start to edge higher, should start to go higher, and bond prices lower. But we're not seeing that at the moment. I was going to show you bonds, but they've just changed. I don't know why they've rolled over. I don't know why my prices are showing the September contracts. ZNU is there. Sorry. Okay, can everyone still hear me? I just had a phone call come through my headset, which I don't know why it does that. Let me just turn that off in case they get a call back. Yep, disconnected. All good. So I'm still coming through. Yep. So yeah, I was going to show you the bonds. I mean, to me, that's sort of been kind of rangy. If anything, we'll go out to a bigger time frame. We'll go to the daily. That'd be fantastic. Thanks, mate. There's a good chance that you look at this big sell-off here. We're sort of grinding. There's a chance that we're going to get another sell-off, but I don't know if the market, like I said, I don't think it's ready for it just yet. I think we still got some chopping around to do, but I think the market's preparing for these yields to go up because, obviously you can't go down anymore. And that big spike higher and then consolidation and then drift lower was fear-based buying, safe haven buying. But why would you buy something with no yield on it? It's the world's worst investment. I guess it's better than buying something that's going down. But generally, you're buying bonds when yields can't go anywhere. You're basically buying something that's probably over time going to go down. So it's kind of a really bad investment anyway. So I think the more these pressure to the downside, the more we can expect the market is anticipating the Fed's going to be looking at inflation and they're going to be easing off their bond buying program. So yeah, that's pretty much as a roundabout way where, like I said, I still expect. So the S&P, I mean, it's still in a nice established uptrend. Teetering on new all-time highs. The Dow, same sort of thing. Just get rid of that. Same sort of thing. Nice uptrend. Nothing's broken yet. Nothing's falling apart yet. So until we see that fall apart, I mean, if yields start to really go up hard, and we're not seeing anything in the stock market, don't expect it to have a massive sell-off. Okay, because it's still, like I said before, stimulus coming into the economy. There's still going to be growth. Companies are going to take advantage of that. So that's what I'm expecting. So this is on the Nasdaq, still in an uptrend. We've got this big flush, held an inside higher low. I know, Joe, you like your ICTs. That's pretty much a good little ICT there. Trend up, pull back, pop, pull back, higher low, breaks to the upside. Your risk is basically on the break, and your risk is below. Entry above, break below, and looking for that to expand, which it did go through the high. It did go through this previous high, but really not by far. So that if anything, the rallies are running out of steam sooner, but the pullbacks potentially, they are the same depth in a way. Like that's just as deep, but it had a good run up prior. Deep pullback, another deep pullback, but it's whether it just continues to grind up from here, we don't know. So Nasdaq is another thing. Keep an eye on that. because it's obviously linked quite highly to bonds or yields going up. That market starts to roll over, and we get a move through this support zone, then that's something to really take note of, I feel, especially from here. We start to this big sort of deeper pullback like we've had prior, but we fail and we roll over and go through that level relatively convincingly, then there's going to be potentially, a few issues to worry about. But for now, nothing much has changed. So if there's any stocks you want to take a look at, chuck them in. And then we'll get into some shares. If there's anything you want to look at, I'll build an opinion on it. Pretty good with that. Talk underwater. Just looking through. So this is the Hang Seng. The Hang Seng's just sort of teetering up near resistance at the moment. Now, you can see with the Hang Seng, I was expecting a potential another sell-off as we're coming to the support zone, there's previous lows, but from the way it's rebounded straight back to the lower high, for me, we're either going to consolidate sideways or we're heading higher on the Hang Seng, which sort of works in well with this break up through previous lower high. You can see that sort of action there. Built a nice base through here, straight back up, took out that low, higher low. This for me is enough of a good pullback corrective action off the highs. Double bottom, starting to look like it's heading higher again. This is on the daily chart. So if that's the case, Hang Seng sort of looking towards bullishness over time. Well, in the short term as well, and that wouldn't be too bullish if everyone's concerned about a major meltdown. So there's a lot to just keep an eye on the macro picture. But for now, just bear in mind what we're talking about, but nothing's changed also. And it's hard sometimes to keep to not get sucked into the news, because don't forget, they want fear. Fear sells. Okay. And at the moment, when the market's so high, obviously everyone's worried about is the fear of a big sell-off. And that's what they're going to drum up. Anytime there's a bit of a crack appears, bang, they're going to hammer it to see if it can open up a bit more. But for now, I mean, like I said, the trends haven't changed. Look at the DAX. DAX is just trading towards all-time highs again, looking positive. FTSE is still a while off all-time highs. I think we haven't traded. We traded up there, but we haven't broken into new all-time highs. So we're sort of testing the all-time highs from was it Feb last year? I just want to draw that up again. But it's in that same zone, which I think we're kind of bullish still. I would expect, at the very minimum, I would expect it if it's going to, the way I look at things, if it's going to sell off, I would expect a flush. If it backs off from this level, I'm expecting continued bullishness and no real flush, but just to continue to grind up. Okay. So I think markets, when you've got a resistance zone like that and it's heading into it, the same with support, it either consolidates below, chops around, and that brings in a few bears, they sort of contract. You're going to get bears and then bang, blast through, takes out the bears, stops, and takes out any stops above that level. They have to buy back that are shorted and had a stop above, and just powers through. When the market sort of plows through and then you get it coming back into the zone, and that's what I'm sort of expecting, more bearish action. And what would be the final one? When you get a market that kind of presses up into it, might pull back, consolidate, and then go. Okay, something like this, but just after it trading into it. But I generally, especially when you're intraday trading, if I'm coming to a zone and it goes straight up, from lows, goes straight up and through, I'm skeptical that's going to be able to continue, especially if the next move is back within that zone. Okay, but if it does, there's a chance that a lot of the time, especially with currencies and indices, they go through, retest, and then go. If it just retests and holds above, you're looking for it to power on up, because any shorts that might have come in expecting to fade that break and expect it to come back in the zone like this is going to get caught, and they buy back into the market to continue that trend on up. So there's sort of the scenarios I'm keeping an eye on, especially that we're trading around the highs. If we just start to back off and grind, I'm expecting it to go through the highs. I do expect it to be into new all-time highs soon. It's just whether it's going to be sort of a continuation pattern or it's going to be a bit of a flush before it dumps. They're the things you've got to watching out for. All right, so let's get on to some shares. Let me just get that up there. Going nicely. So we got Perseus into new highs now. I'm expecting that higher. Look at that weekly chart. I don't know if you can see it. If it's, just let me know if it's not clear. ALK going nicely too. So generally speaking, the goldies are still going nice, even though the market's down a bit. RAC, Race Oncology Limited. I like that. You can see that on the weekly too. Look at these. I mean, this is for anyone, if you're looking at, you look at markets from probabilities, this is a good example. We've had a push up here, pull back to the MAs, power up into new highs, took out the previous high convincingly, took it out, pull back. We always talk about 1/3 to 2/3 pullback. If you're pulling back only the first third of that move up, the previous move up, like this move up, you only pull back the first third. Strong move. Expect some good continuation, which did happen. Powered up and through. Now this move here, when we're looking at this leg, the recent leg up off about $1.50, it's still, it's pulling back. It's about $1 off the highs. So it's more like sort of 1/3 to a half. Was it 30 to 50% pullback, somewhere around the 40%, 30 to 40% mark. Still relatively strong. So it still looks like it's got some residual strength in that move. Okay, and when you see, the way I'm looking at stochastics is when it's powered up into that high and it starts to fade, there's selling pressure coming in, but it's consolidating. When it's consolidating the highs and the selling pressure starts to take the foot off the pedal, what's left? Buyers are left to lift it. So I'm kind of watching this, especially on the weekly, it looks quite good, to bounce off those MAs and rally again. The thing is, momentum's starting to come right off, so that's fine. I just think it's going to take some time. So if momentum's starting to fade, what I don't like to see is the MACD rolling over and you start to rally, because I'm sort of looking more towards a lower high than anything else, or just a retest fail of the highs at $4. But for now, I think it still can continue to go sideways, consolidate through here. I would ideally like to see a pop up through resistance. If we're looking at this one here as an example, popping up through, say, that 350.60 mark. What happens? A good push through, pull back. If the pullback gets held up at a high level, then considering that the weekly is looking to bounce off the MAs, you've got the weekly strength on your side. The daily has had a bit of a pullback, but it's holding those highs, consolidating, and then starting to go again. It's still showing some really good strength. Pan is another one. Just keep an eye on Pan. I don't know what happened here. I haven't been bothered to go through the news too much. They went into a trading halt for a while at the start of mid last year, probably just to save themselves from getting hammered. They thought they might get hammered because the market was selling off. But either way, since then it's went sideways, started to lift, had a good pullback, Feb March, and started to lift again. But the good thing is the daily is pushed back above the MAs and it's been consolidating sideways on the MAs. Now, if you look at the weekly is consolidating on the MAs too. They're just starting to cross up. So it's getting some strength into it. I just wanted to see one thing before I move on. Let me just get up my drawing tool. Just want to see where that is in relation to the highs. If you're looking at that, so that there, I wouldn't be buying it just yet, because I think it can have a false breakout quite easily. Something like this looks strong, holding a higher level, breaks out, and gets sold again. So you don't want this to come up through these kind of levels and just touch through, but still hold the trend down, and then get belted. I'd rather see it pop up sort of convincingly. I think on the this is a weekly. On the weekly, if it does pop up convincingly, the first pullback, going down to your daily, looking for that contraction on your daily, but it's a pullback on your weekly, and then go into your daily for the entry to refine your entry, because I think that first pullback starts to get soaked up after a good little run higher. Then it opens up a move, to 50. You've got a lot of levels where it could go to, and just plow straight through. So I kind of like Perseus, not Perseus. What am I talking about? Panoramic, and Jarvis. It was something that I was looking at for a while, but to be quite honest, I didn't see any good, decent setup there. In hindsight, I should have just got in, but I don't see this, push back above the MAs. The MAs rolled over, pushed back above on the daily, one retest, and then just jammed straight back up. I find that very hard to take, because I'm thinking there's not enough consolidation at that level. for buyers, a lot of buyers to be committed. I sort of look for it to push through the highs and then someone come and dump on it, a bigger seller. So I don't think there's, when you get these kind of moves, as opposed to maybe this, a bit more energy, a bit more buying put in there. When it pops above and you sort of, that's probably the only retracement to the MAs, push up, another retracement, and then bang, straight up. I kind of think it hasn't spent enough time confirming that level for me. So, it could keep going. So be it. I just missed out on that one. All right, let's get into Jarvis. Oh, we might as well keep going on this one. JRV, Sharon, what have you got on that? I mean, that to me, the daily, I might still have to be patient on this because that weekly is looking really good. I mean, that weekly to me, it takes a lot more to turn a weekly trend than a daily, if that makes sense. So we could chop around here like we did, say, like we did. So if you're looking at a daily chart, if I can find my mouse back, we've got this uptrend here, which is looking quite good. Last time we sort of spiked up, like potentially like we're doing here, it did here, it consolidated on the weekly. It held a higher level. So that's what I want to see. I'm happy to give up some profits. That makes sense, to be able to trade in a good zone, which is a high probability zone. Right. So potentially that's what I might have to wait for on the weekly. This move on the weekly prior was a press up. You quite clearly went through some highs, and you can see these little lower highs come into effect, a deeper correction. So it was just trying to sucker in a few shorts, work its way back, and then lift it off that zone, lift it up, held a higher level. So that's your first sort of continuation trade with that weekly trend out of contraction. So expansion, contraction, expansion, contraction, and we're back into expansion potentially. I'm not 100% convinced by the weekly chart that we are, but other things are looking quite good. I like the look of the MACD, the way it's sort of rolling back up. It hasn't got out of hand at all. Good little volume that came in the last couple of weeks for this press higher. So there's a lot of things working in its favor on the weekly. I'm just sort of watching that daily for now, just to see if we can, whoops, back here, just to see if we can have a bit of a pullback and see what happens on that first pullback. And if we can get something like this to work off, that'd be fantastic. Then, yeah, for me, it'd be a buy, a nice little buy. But either way, it's going up. A little bit extended for me on the daily, but the weekly is a very good support. Whereas if you're on the weekly and you're coming into a resistance zone when it starts to show a setup on the daily, you've got to be concerned that we could just press into it, but we're showing weakness on the weekly. You've got to be concerned. But at the moment, we're showing strength on the weekly and strength on the daily, so it's really good. Sharon, IGO, Pete, that's looking quite good too, just by glancing at that. Yep, same sort of thing. So all you're trying to do, I feel, with any sort of analysis, especially from charts, you're looking at it. If you are below some highs, you're looking at what's the price action with the setup. If it's setting up on the daily, is it a 1-to-1, 2-to-1, 3-to-1? What sort of potential have I got in that trade? Where am I going to place my risk? And where could it go to? Now, if it can only go half to one, it's not worth it. Meaning that if you're going to resistance zone, like this, for instance, I'll just try to find an example. It's probably not the best example, but if you're, just draw that. So you've got a resistance through here. Yeah, that was probably not a bad setup in hindsight, but it just didn't go anywhere. With this kind of a setup, where your risk is below. It broke the high. You can trade that. It's going up. To me, that's by the time, probably why I wouldn't have liked that one so much is that the MACD, this is in hindsight, we're starting to roll over. You're not getting the MACD that's going up like that. You're not well and truly, say you're trading here, the MACD is clearly up. At this stage, when you're trading in that zone there, the MACD's sort of been heading down. So I'm always skeptical that's going to be a bit of a false breakout just after you got through a previous hike. So I would have felt that we wouldn't have had this pullback and this pullback back below that high. So to me, that's more chopping around the high, a bit of uncertainty. When you go through the high and you pull back and retest it, and then you start to get these high lows, I'm more inclined to take that. But when you come back into the zone and you're sort of chopping around, couple that with the MACD, I wouldn't be too convinced on that. So in saying all that, that led to a good correction. Longer term, we're building this price action. Let me clear that up. It's looking like rubbish at the moment, isn't it? Let's take all that off. That one there. This time around, we plowed through it, plowed through this high. So, whoops, what we're going to question, are we going to do around $7, the same thing we did here? Okay, are we going to do this here? Where we chop around, and again, taking into account that we've sort of got this similar thing happening. Okay, this is on a weekly, don't forget, longer term. So there's still room to get it right on the upside, but you've got to bear this in mind when you're trading it on what's the longer term saying. Now, this longer term may not mean anything, because don't forget this was the start of 2020, big sell-off. So that could be the reason why. But just bear in mind, if the US starts to roll over and the ASX starts to roll over, don't expect that too much follow through on that weekly chart. Okay, and it may just turn out to be this kind of a pattern where we do bust through the highs and then completely fall on top of any buyers, any holders, and just sell into that strength. So we could be producing the same thing, but if it's going to be hard with the ASX just pressuring into new all-time highs, because there's got to be some serious follow through, and I think we're tentative to follow. We're tentative at the best of times in our market, but we could be tentative to get some serious follow through. Okay. So for me, I'll be looking at that on a weekly basis. I'll be a bit concerned, but if you go back to the daily, that daily is not a bad setup from here. Ideally, what I'd love to see. So you've had, let me just draw that up. If I was, I always talk from the point of view of looking to enter new, not okay, if I entered here, what I'm going to do, manage my risk. If you entered in here, fine. You've probably taken some off the table, somewhere into here, somewhere into the highs, into this zone. You probably took some risk off the table. Where's your risk now? Potentially here. But at the moment, if I'm looking for a new trade, I've got a clear level through here, $6. I've sort of got some range bound action through here. We've just broken out through the top side, and we've potentially getting a bit heavy. So we've broken through, had a pullback, deeper pullback, took out this low, and we started to back up there. I would want to see a higher low. So we've sort of got rally, pullback, pullback. We're sort of up here now. I want to see just, trusty high low above 720, maybe somewhere 740, 50 area. And if it breaks that level off a higher low, I've got a feeling it's going to go through 780, and it's going to, from there, we know, that's a good setup. We don't know where it's going to go to. We don't, like I said, back to the weekly chart, we don't know if it's going to be flush higher and then completely dump. We don't know any of that, but what we do know is where we've got our risk. Now, if that could do two things from there, it can plow through it and then go bang, get through these highs and then completely dump from there, or it just continues its way up, and that way, if that's the case, then we just manage our risk as we go. Okay, so it's not about keeping out because of that, what the weekly's saying. We don't know if we're going to be right this time. We don't know anything. All we're doing is looking at that setup, that's pretty good setup. Good chance that that higher low into that zone is going to be supported by some buyers, and it's going to press through. We don't know how far. That's all. That's the question. That's the question that will be answered later on. All right, so that's IGO. We'll just finish off on IHL. Always checking back on the weekly. Weekly, actually really nice. Weekly's primed. I might want to see it do a bit of work. So if you look at what happened previously, pressured up, consolidate a bit. ICT, here's your ICT, Joe. No, that's not what I want. That one was that one. It might actually show up better on the weekly, on the daily. So anyway, trend is well established. It's up. I would like this kind of thing. Pullback, pressure up off the MAs, pullback, higher level, ICT. Anyone that doesn't know, we call ICT an inside continuation trade. Okay, so that's what I'm talking about. And I'm looking at this thinking, well, it is. You got to pressure up, first pullback. When you get an inside high low and you get this kind of thing, break to the top side of this little lower high, is that ICT pattern setup. And you can see it kicked on quite nicely. I think we've got another one just in here, nothing in here. So maybe we're going to do the same thing. Maybe we sort of pop up from here, have a pullback at a higher level, and then break and get that continuation trade as well there. Okay, so just keep an eye on that. That's your weekly, looking really good. So the next thing you want to look at, because you know the trend has been up for a while, this is not your first pullback, this is not your second, it's actually your third pullback, the MAs on the weekly. The next thing to ask yourself is how much is left in this trade. Okay, we know that MACD, it's getting a bit stretched up here, potentially. Doesn't mean that it can't keep going and we can't go into new highs, and especially if you go back down to your daily, which is what we trade from. Let's just wiggle that in. If we get a nice setup here and it gives us a 2-to-1 just into the highs, it's worth taking. Okay. Say this was your ICT setup. I'll just draw that up. So this was your your leg up, pullback here. That was your leg up. So that's your ICT on the weekly. You can see a much better one on your daily as well. So beautiful, really, really nice kind of a setup there. If you can see what I'm talking about, just later on, we traded into it, pulled back. Again, we held off the daily. So all of a sudden, by looking at your daily, even though it's a weekly, a high probability continuation pattern, the ICT is, on the weekly, your risk is a lot bigger. So if you're looking at your daily and you see that you're front running the ICT on the weekly, but you can get a much better risk profile on your daily, you can head up into those highs and retest the highs and have a 2-to-1 trade, which it pretty much was here. You can see one, probably two, maybe 2.5 to 1. So 2.5 run just into those highs, let alone if it keeps going. Okay, so if we get a similar type of setup, even if the weekly is a bit stretched, there could still be a 2-to-1 or 3-to-1 setup back into those highs. Okay, and if it's not, obviously you're just managing your risk from there. So yeah, it's daily's up, bouncing off the MAs, the weekly's bouncing off the MAs. There's nothing bad about this trade at the moment. It's just really sitting for me, not knowing how you trade, Joe. For me, it's just waiting for that entry setup. And I just want to see, I've got everything else lined up beautifully. Look at the MACD on the MACD here, not much volume coming through. We'll probably get some volume when it starts to break up, like we sort of got here and here. Look at that volume comes through on this little minor level as well. That's beautiful. Before the not much volume, before through here, but as soon as we get that ICT on the daily, some good volume. You can tell that you're on the right track if you start to get that set up with volume increase. So we might have to wait to get a bit of volume increase if we can get this kind of a setup on a daily. All right, that's what we're hoping for, and all we can do is watch this, because this has got to be on your watch list, which I'll put it on mine as well. But it's got to be on your watch list because of the weekly and the daily. Prime zone, your MACD looks to be bouncing off that zero line. We're just waiting for a setup, like I said. Okay, so what we'll finish it there. That's pretty much. If there's anything else you want to quickly look at, whack it in. Give you a few seconds because I know there's a delay. But if not, we might just call it a day there. Still like ALK. There's a bit moving today. It's just the market itself is not going anywhere. So there's some heat coming out of the action up near all-time highs, but little miners are doing okay by the looks of it. Gold, look at Perseus, still going. I want that to really kick on. If it can kick on, looking at 160 potentially, get up to 160 or so for a partial. IVR, all right, we'll get into that. Let me just write this down. Okay, IVR. I'm on here on a weekly as well. But the same as sort of what we've been talking about. So Sharon, it's going up. So all you're trying to assess when you look at this weekly is, okay, it's going up. We know that. Is there much momentum that could be left? Still getting volume. We're still getting that profile that we like to see for continuation. And that's all you're worried about with the weekly, because for me, you're trying to assess where you are on the weekly for the probability that the daily, you might have to wait on the daily and potentially miss it. I mean, it's hard to say, but I sort of look at these weeklies going, oh, look, for me, just by assessing this one, we've kind of extended higher up to 12. Let me just draw that a lot closer. We'll get that. Still going. Here we go. Like that. So you can see this leg up. We probably pull back here. That sharp spike, and then it was a red candle. So that triggered some sell-off. So that was quite a deep pullback in comparison to these lows. But it was straight back to the MA. So you kind of got ahead of itself, come back to the MAs, and it's pressed up again. But we're sort of kind of on the weekly, we're kind of into these highs, previous highs, and we're getting ahead of ourselves again. So is this going to be a double top? We don't know. We might need it to pull back, build another high low, potentially something like this off this kind of a level, hold the MAs and expand up again. So for me, I'm kind of late to the party on the weekly. If I'm going to buy here, if I'm buying purely from this weekly, my chart, my risk is going to be right down here around 7 now. What's that? 5 cents from 12 cent stock. You're looking at nearly 50% drawdown on that, or 50% stop out. So there's not much. If you're looking at that respect and you're having $1, because to me, I'm not going to put a dollar value stop on that and always trade the same amount. As in, say you're trading 10 grand positions. I don't know, buy 10 grand and say, where does a $500 loss sit me? Okay, it could be right up here. You can easily get flushed out there. My stop has to be there. Okay, that's where my entry is. If I'm basing it off this weekly, that's where my stop has to be, and I'm working my risk around that from a dollar value point of view. Okay, which means that I've got less exposure to the upside. So 1-to-1 has to move a lot just to get 1-to-1. I'm not going to there's not much fat in that trade. So that's what I'm thinking on that weekly basis. If you look at it on a daily, stretch that out again, it's kind of extended on the daily as well. So I'd be more inclined to let that sit for now. See what happens on the first pullback. If it pulls back, that's my week. If it pulls back and it holds, consolidates, yeah, I'm happy to jump in because you know that it's probably going to drag in some more buyers. So if you sort of go up, that's your high. We go just through the highs and we have a pullback, but we consolidate around there. Then I'm looking for my entry because what you'd be expecting, a lot of people will look at this and go, it's extended, like myself, for instance. Then it pulls back and holds around that level. So we might just chop through it, pull back, and have a really shallow pullback. Now, if we get a shallow pullback and we consolidate there, that's a sign of strength. And anyone that's waiting has to take note of that strength and go, look, if I want to be part of this action, so I think that weekly is very bullish, then I might have to deal with the fact that I could get stopped out in this, but it's still showing a lot of strength from that daily chart. Okay, so all we've done is run up into the highs. So we don't know from here whether we're going to go up into the highs and fail, and we're going to have a big pullback, and it's completely on the wrong side. So that's why I wouldn't be trading this one just yet. I'd just be sort of holding. If you're in that stock and you're in from these levels, great. You've got little risk. You might take some off there if it doesn't do anything in the next couple of days, just to book some gains. And then you can always re-add that position later on, that partial. Okay, so like I say, you pressed up into those highs. If we consolidate here and I get a setup, I know that my risk reward, I'm expecting it to power higher because that's a good sign of strength that you've got this move into the highs. Then you consolidate around, above 10, 10 and a half, 11. You chop around there for a few days. It's showing some strength because it's not wanting to pull back. And if it starts to rally again, you get a rally through a lower high, then you've probably got to get on board if you're not. Okay. Yeah, good that it makes sense, Sharon. So that's the way I'll be viewing it. I'm always happy to leave something if it doesn't set up for me. The last thing you want to do is chase things, because if you get into a habit of chasing things, you get into a habit of taking massive losses. Okay, you think of it that way. And if it's all it is that you don't want to do a bit more work to find another stock, then no offense, you probably shouldn't be in trading, because it's all about the work you put in, not just picking something and go, how do I trade this? No, if it doesn't show you what you like to see, move on to the next one. Wait to find something that shows you something good risk reward profile. There's a lot into that. Your risk is 2-to-1, 3-to-1, or whatever. Then I'm happy to get in and have a crack at it. But if not, leave it. Just wait. Like JRV was the other one you got, Sharon. This one here, I probably, like I said, I didn't like it so much in here. I didn't think this was a really good setup long, even though it's worked out potentially okay. There's no reason why it can't come back and stop me out and reset up off the longer term MAs. Take a bit of heat out of that. So again, this one's one that I was watching. There's going to be many, many times you're watching it thinking it's going to go up, it's going to go up. You're completely right, but it doesn't set up for you. And that's the most important thing with trading. It's not about being right, it's about your risk. Okay, if you can't manage your risk clearly, you haven't got a position to manage your risk clearly from, then you probably just have it, step aside for a bit. Very well known trading company. I hope you're not picking on me, Sharon, but that's fine if you are. Yeah, as you probably know, then there's a lot that I'll watch and I won't set, we'll set up, it's on the watch list and we just don't jump in for whatever reason. I'm not happy to jump in. And that's where it is. I mean, if I've only worked in 10 positions, we only had up to 5 recently. We're only at 3 now. I'm still, you can still get some really good returns just off a couple of positions if you're divvying your portfolio up into 10. Now, if you're stacking them up to, you're not willing to close out ones that you're wrong on, you're holding ones and you're taking little positions, you might have 30 stocks in your portfolio. Bang for buck, I don't think it's the best. So yeah, anyway, we'll probably call it a day there, guys. Thanks very much for joining me. If there's any questions that I've missed out or anything you want reconfirmed, just send an email to support@tradesetup.com.au, and then I can follow up from there. If not, we'll see you next Monday. Have a good week, and hopefully, like I said, don't expect too much for the rest of the day, and too much tomorrow because there's no lead from the US. And I wouldn't expect Europe to get out of hand either, considering that US is going to be closed. They're the key market. They have been for a long time, but they're the key market at the moment. All right, guys, thanks very much, and we'll speak to you again soon.